Okay, get this. Imagine a company adding, I don't know, the entire value of Ford Motor Company to its market cap in a single afternoon. Well, that's exactly what Meta just did. So, what is driving this absolute frenzy? And more importantly, what does it tell us about where the internet is headed? All right, let's break it down. Boom! The moment those numbers dropped, Meta's stock just surged, shooting up over 10% in after-hours trading. Wall Street was clearly impressed, to say the least. But what was it? What did they see in this report that sparked such a massive buying spree? Well, it all comes down to a few key numbers. At its core, the reason for all this excitement is pretty simple, actually. Meta didn't just meet expectations for the end of 2025. They absolutely blew them out of the water. And then they painted an even brighter picture for what's coming next. I mean, just look at these numbers. It's a total clean sweep. Analysts thought the numbers would be good, sure, but Meta came in with a knockout punch. They didn't just beat expectations on earnings and revenue, they also gave a forecast that showed this incredible confidence, the kind of confidence we haven't seen from them in a while. This is a company that's just firing on all cylinders. But here's the thing. To really get what Meta's trying to do with these huge, ambitious bets on the future, you first have to understand the engine that's paying for it all. And that engine is an absolute monster. Get this. A whopping 97% of all of Meta's money comes from advertising. We're talking about a financial engine that cranked out more than $58 billion in just one quarter. This right here, this is the cash machine. It's what funds every single one of Meta's big, bold, and, yeah, sometimes pretty controversial plans for the future. So the big question is, where is all that ad money going? Well, if you read the fine print in this earnings report, it becomes crystal clear. They're making a massive strategic pivot towards one thing: artificial intelligence. Just look at this jump in what's called capital expenditures. That's basically the money they spend on physical stuff like servers and data centers. After spending around $72 billion in 2025, Meta is now planning to pour somewhere between $115 and $135 billion into its AI infrastructure in 2026. You guys, this isn't just an investment. This is them declaring all-out war in the AI arms race. Okay, but what does all this spending actually mean for you and me? Well, Mark Zuckerberg's vision here is way beyond just better recommendation algorithms. He's imagining a future where you open up Facebook or Instagram and you're greeted by a personal superintelligence, something that creates content just for you, tailored to your exact desires. That's the grand vision, and yeah, maybe a little unsettling, that they're using to justify this unbelievable price tag. But here's the twist. As Meta is sprinting full speed ahead into this AI future, they're still dragging along some really, really expensive baggage from their last big idea, the Metaverse. And wait till you see these numbers. They're just jaw-dropping. In just the last 3 months of 2025, Reality Labs, that's the division building the Metaverse, posted an operating loss of over $6 billion. And you want to know the kicker? That same division only brought in $955 million in sales. It's like spending $1 just to make 15 cents. Wow. And if you zoom out and look at the bigger picture, the numbers just get even crazier. Since late 2020, the Metaverse project has basically become an $80 billion black hole for the company. I mean, that's more than the entire GDP of Croatia. Now, Zuckerberg says he thinks 2026 will be the peak for these losses, but man, that is a monumental gamble that so far has shown no real sign that it's going to pay off. But you know, the financial numbers, they only tell part of the story. If you look beyond the balance sheet, there's a serious storm of risks brewing on the outside. And these could have a huge impact on where Meta goes from here. For starters, Meta is staring down a landmark trial, and Zuckerberg himself is actually set to testify about the alleged addictive nature of its platforms. At the very same time, you've got regulators in both the US and Europe who are really tightening the screws. Then you add in the political heat they're taking over how much energy their data centers use, plus this growing fear among developers of a VR winter, and what you have is a company fighting a war on multiple fronts. In fact, Meta's own report even admits that all these headwinds could lead to a material loss. So, here's what it all boils down to. Meta is an absolute advertising juggernaut, no question. And it's using those massive profits to pay for this incredibly ambitious, frankly breathtaking pivot to personal AI.
But at the same time, it's shackled to this $80 billion bet on the metaverse and facing a tidal wave of legal and political threats. Meta is building its version of the future at a truly staggering speed. And that leaves all of us with one really big question. Is the world actually ready for the price?